Yeah, as you were talking, I started thinking about like, I really want to press this on the listeners so that way we can really accept this as the more appropriate expectation with the things I'm teaching. All right, let's make the argument for the sake of the conversation. Let's say that Bitcoin, and I am not going to say that it subscribes to what I'm teaching. I don't know if it has the same level of degree of precision like you see me execute with the markets I do. But let's just say for the sake of discussion that Bitcoin follows it the same way. And before we traded it above 20,000 and it continued through it, you were expecting a market maker buy model to complete and a smart money reversal to form. You would have been smoked. Like you would have been completely obliviated. And you you got to understand that where we're at right now, any string of events that would take place could easily propel this thing into a parabolic run to all-time highs, and vice versa. If they start dropping tactical nukes in Israel, okay, and trying to blame or frame it on Iran or Russia or some other Arab nation, our markets are going to fall like you've never seen before because that's just what they're going to do. And all the ICT wonder stuff isn't going to work. It's not going to matter. Quadrants ain't going to exist. It's just going to go, there it is, it's gone, vaporized. I would be very uncomfortable allowing the previous speaker that was talking about, do I think you were coming close to a smart money reversal because of this, that, and the other thing. I am very, very cautious to even imply that that's something I would warm up to in any measure. I don't think you should think about it that way. Um, and I'll say it this way: look how meteoric of a rise Bitcoin had. Look at the meteoric rise that gold is under right now. Look at what coffee did. You know, look at cocoa did. These are markets where if you're trying to use this market maker buy model to project and predict, if you will, the smart money reversal because it's done 2 drives, 3 drives, whatever drives, whatever it is that you're anticipating, you got to be real careful not to expect too much from the things I'm sharing because what it sounded like to me, and I might be wrong, but it was my interpretation of what was being presented as an opinion or a statement. It sounds as if that you're expecting that this concept in some way or capacity is going to be able to predict the top of the marketplace. And I've already stated that I don't know how to do that when we're in all-time highs. Like I don't know how to do that. I don't believe anybody does. And if I did, I sure as hell wouldn't be teaching it. I would never teach it. And if I was teaching it and it was effective all the time, they would be want to come into my house and say, like, we want to see what you're doing, okay? Because that's just too much. But I really want to make the point, this stress that there is absolutely no belief on my part that when markets are trading at all-time highs and there's just some parabolic runs, that there should be no focus at all on anticipating the smart money reversal. Smart money doesn't even know when it's going to reverse. They don't. So they have to wait for price to give you certain things. What they're doing is, and this is why I teach you to take partials every time it creates a swing high on any time frame. As the market keeps going higher, 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 every time that there's a swing high formed, above the high that just gets pierced, they're distributing their longs. They're throwing them along like horseshoes. Okay, you ever played a game horseshoes where everybody has a horseshoe in their hand and they toss it toward that post in the ground? Well, the previous swing high at all-time highs, smart money is trying to toss that horseshoe around the furthest part past that high. And they're distributing their long position, exiting out, getting there. They're not trying to sell. That's their primary function is they're already long. Their function is to distribute their long position every chance they can at the most premium price they can. There may be some accumulation of shorts, but in a market like gold, where we don't know how far it's going to go, just because I have a target of 5,000 doesn't mean it can't go higher. Just because I said something doesn't make it 100% valid and true, and then nothing else can happen. So there has to be some balance with the expectation of, as a student listening to me. I understand that some of the things I show and teach and call out, and it's phenomenal, it's great. But I'm still a man, I'm fallible, I can mess up. And I don't want you to lose sight of that, because these tools, when I was younger, made me feel like I was Superman, and I hadn't mastered myself yet. So having unrealistic expectations of being able to determine where the smart man reversal is when we're at all-time highs is outside my pay grade. I don't know how to do that. So hopefully I made that very clear.